So I think it is a pleasure for me to actually speak on this stage. You all, the audience here is leaders on their own right, taking your organization forward and taking the country forward. So just to give a brief introduction before I start into the core topic which I have been given. Today is basically on financial inclusion through Fintech. I am currently the director in Department of Economic Affairs, Government of India and Ministry of Finance, taking care of digital economy and Fintech. And I have been in this role for the last 3 years. And apart from also, leading this role of digital economy and Fintech as a policy unit on Department of Economic Affairs, I also take care of leading India in Global Partnership of Financial Inclusion, which is a working group in G20. So has been involved in the G20 for the last 3 years during our presidency, as well as the current last year in Brazil presidency, and this year it will be in South Africa. We deal with financial inclusion, various aspects of financial inclusion and the matters related to financial inclusion and the global discourse, how it would be framed, and we put forward our country's point of view there. So saying that, I just had some few slides. I don't want to go through these slides and have few data points also to showcase how we are moving forward. Because financial inclusion as an objective is such an over-encompassing objective that includes all kinds of digital financial services and fintechs to attain these financial inclusion goals. So we can move on to the next slide. So briefly, this is what I have covered in the slides, but we'll go through, and I don't want to be very elaborate. I want it to be interactive, so please feel free to interrupt me, or if you have any queries, it is a mutual learning from both from you to from my side, to you, and to your side to me. So this is what I thought that we'll have some discussions on financial inclusion, India's financial inclusion journey, G20 DPI, emerging areas, and the way ahead. Yeah, next slide. So these are the high-level challenges of financial inclusion which we still have. There is a lack of access. So by the way, financial inclusion, we understand in the global terms with 3 dimensions: access, usage, and quality of financial inclusion. So based on these 3 dimensions of financial inclusion, there are multiple challenges. I have listed down some of the challenges here. There are many more, but these are the core challenges which we deliberate not only domestically, but also internationally. Some of them are quite unique, like the socio-cultural norms that discriminate or show unintentional bias against them. So we have heard many cases, like in the rural areas, if some woman goes to get some loan from any of the financial institution, they are considered as high risk, just because of the gender bias. So those are different kind of societal norms which dictate this kind of a discriminatory behavior. So not only our access and reach and the remote areas are the hindrance, but there are also financial awareness and education which are required to actually intervene on this kind of a discriminatory norms which is there in our ecosystem. So go to the next slide, please. This is what our financial inclusion journey which India has covered for the last 1 decade. So there are a few more graphs we will quickly slide through, but just to give you a gist, and then this is an amazing story, and I quote that in almost every international and domestic forum, because prima facie, we have like inherited that this is one of the success stories. It is quite, we have naturalized this success story. But if you see in 1 decade, 2010 and on, I think the numbers were around 21 to 17% of financial inclusion in India. And then come 2019 and 2020, by World Bank Fintech survey itself, it is around 80 to 82%. And with the recent survey which was done by RBI, it should be above 90%. So this journey from 17-18% to this 80% to 85% haven't happened just because of in the traditional way. We had some kind of a specific intervention which is unique to the whole world. So these are some of the things which we have introduced as a policy in terms of the introduction of Aadhaar as digital ID. Many of the flagship government programs, I don't want to reiterate again, Pradhan Mantri Jan Dhan Yojana, Pradhan Mantri Insurance Scheme, direct benefit transfers, fast UPI. We don't have to again reiterate the success of UPI which we had, account aggregator, and then we also have how we have pioneered the term DPI or digital public infrastructure, and I was personally involved in this whole collaboration of how we came up with this term of digital public infrastructure, which is not a new concept, but the nomenclature has been a new one which we established in the global forum in the 2023. Yeah, so next slide please. This is actually the success story which I was trying to mention, because this has been again a regression analysis has been done, and then this is quite a impactful regression analysis and the inference which has been drawn. It has been said that the journey which we have done in the last 8-9 years, traditionally without this kind of a digital public infrastructure of Aadhaar, UPI, and account aggregator and other various infrastructure on the digital array, this could have taken 47 years. So this development of 47 years has been concentrated, has been done in last 8 or 9 years. So which is a unique story of its own. Yeah, so next slide, please. Next slide is basically on the different kind of men and women with bank accounts in India, just a segregation of that, and how we have dispersed the small loans to India. So again, these are all publicly available data, so I don't want to just again go through it, but it just gives an essence of how we have progressed over the time in the various aspects of financial inclusion. Yeah, next slide. So now some of the government initiatives which I can highlight. Yeah, please, next slide. So again, our basic essence of digital public infrastructure has to be supported by the ICT infrastructure. So if there is quite a kind of a confusion in the overall global literature in terms of when we say digital public infrastructure, whether telecom infrastructure is part of that. We have intentionally and very consciously segregated ICT infrastructure from digital public infrastructure, but with that disclaimer that ICT is an essential form of infrastructure which is required for digital public infrastructure to function. So when you say ICT, it is basically information and communication technologies. Based on that, India is have progressed a lot, and that is what we call as a JAM Trinity: Jandhan, Aadhaar, and Mobile Trinity. The JAM Trinity, which is beyond the success of our financial inclusion, which has happened in the last 1 decade. Yeah, next slide. So again, so this everyone knows how successful our Aadhaar system is, but one thing which we were trying to do is like the eKYC. So as part of our role, we also deliberate mainly on the ease of doing business and ease of living in India. So in terms of ease of doing business, one of our key priority area, which has been announced in multiple budget over the years, is like creation of a simplification of our KYC. Because in your organization, there might be an instance, because most of you are dealing with financial matters, KYC has been a bottleneck and a hindrance for doing business in many scenarios. So we are trying to simplify it. It's quite a complex scenario because there are multiple regulators in India, and every regulators have their KYC norms, which are some kind of differentiated from other regulators. So we wanted to have some kind of a uniform KYC norm across the regulator and also simplify it. So multiple changes which has been done, and KYC, just to give you a kind of a understanding that KYC, it is guided by or enabled by the law, which is PMLA, the Prevention of Money Laundering Act. Based on that, the rules, and based on the rules, the KYC regulations are carved out by different regulators, the RBI, the SEBI, the IFSCA, the PFRD. So any change which we have to make is also impacts the law. So any law first has to be changed, and the law is again guided by the FATF. The FATF organization, which gives the direction in the recommendation 1 in the customer due diligence, is actually how the KYC norms are laid down in most of the countries. So based on that, we have simplified the KYC. Now we are actually, there was a CKYC registry which was formed in 2013. It had some operational issues. That has been kind of solved like now. So CKYC is currently quite efficient in terms of having your KYC record. So right now in today's regime, at this point of time standing here, if you are going to do a new KYC, you don't need to go with the documents with the bank or any of the institutions. What you need to do is currently give only your PAN card, your date of birth, or the name. The bank official should find your CKYC record in their database and download all your records if you have already done KYC in some other institution. Okay? If you have your CKYC number, which you can again get from the CKYC website, you can actually supply it to the banking personnel to fetch your data. But if you cannot do that also, you can give your credentials and they may download it. And if your credentials are all correct and nothing needs to be changed, then you don't need to submit any kind of a documentation to any of the financial institution. So this is how we are trying to simplify the KYC, and the basis of this has been this Aadhaar and the eKYC. And we are clocking huge numbers in terms of the number of transactions which has been done on this infrastructure. And just to give you a semblance of how we have been cost effective, because at certain point of time, the banks used to incur a cost of INR 500 rupees to 700 rupees in doing KYC. Right now, the cost has come down to around 3 rupees or 4 rupees. So this is the kind of cost reduction which we have done by this kind of implementation of infrastructure and changing of the process. Yeah, next slide. Then this is like some of the flagship schemes. I don't want to get into the details of the schemes. These are all common knowledge in terms of the Pradhan Mantri Jan Dhan Yojana, how many accounts are there, how many women accounts are there, how many rural and the urban accounts, RuPay cards issued, what is the average deposit. Similarly, direct benefit transfer, we are doing it for more than, I think, 350 schemes. We are doing direct benefit transfer. So, and the savings, if I am not wrong, it is not written here, because of implementation of direct benefit transfer using the rail of Aadhaar has been around $41 billion. So it's again a use case and a showcase thing for the government of India. Like we implemented Aadhaar with a cost of around $1 to $2 billion. But over the years, the ROI, the return on investment on this kind of infrastructure has been 40x. So this is a huge thing which I think we can actually showcase through the implementation of this kind of a digital public infrastructure. Yeah, next slide. Then again, these are again some of the insurance schemes, because financial inclusion is not only about, so as I said, access, usage, and quality are the three dimensions of financial inclusion, but financial inclusion is also pan the sectors of financial domain. It includes the banking, it includes payments, it includes lending, it includes investment, it includes insurance. So they, across the different sectors of finance, there is a policy intervention which is needed for financial inclusion. So based on this, like these are some of the very basic financial inclusion schemes from the insurance sector and those from the social security sector of Atal Pension Yojana. So these are all of common knowledge. We can just go to the next slide. Now to our true story of fast payment systems, or UPI. So UPI, as I said, that how UPI is kind of right now, we take it for granted to pay UPI to any of, while drinking a cup of tea or buying vegetables, and now we do transaction through UPI. So it was not a common thing in 2016 or 2017. That point of time, our penetration was hardly 20 to 25%. Now our penetration is almost 60% of the population who actually do payments or transact in kind of payments. And we are trying to achieve much more kind of a run rate in terms of the last December, it was 16.73 billion. And we are trying to do 1 billion per day. So we have a high target of 30 billion maybe per month should be achieved in the next few years. That's the target of UPI. And this is the transaction volume, how it is increasing, and the transaction value, how it is increasing on the UPI. So this is, again, a very huge success story of our financial inclusion initiative and implementing through UPI. Yeah, next slide. So this is a new one, which is called account aggregator. Obviously, the audience here, everyone will be knowing about it. But this is a DPI which we need to scale. We have initiated account aggregator for the last 2-3 years. It's right now almost like, I think the numbers here, 2,000 or something million accounts enabled and some number of consents. So if you see why I'm saying it needs to scale up, because if you see the number of accounts which has been enabled is around 2,200 million accounts. But number of consents which has been fulfilled on the account aggregator has been around 140 million. So there is a delta there, and which we need to fill up. So the main thing is awareness, the efficacy of the system, the need. We have to build the system, because this is again a digital public infrastructure, which not only is kind of dominated by only by one institution, but it is across all the regulators, across all banking institutions, across all investment institutions, across all insurance institutions. So it's a multi-stakeholder initiative. So in the multi-stakeholder initiative, there always has to be some kind of a consensus among all the parties to take the things forward. So right now, this account aggregator is hosted by Sahemati, which is a non-profit organization, and it is regulated by RBI, obviously with the concurrence of all the other regulators. So that is how the ecosystem is. So I think I don't have to explain how the account aggregator works, but account aggregator normally have the three typical entities. One is the FIP, the financial information provider, then the consent managers, and then you have the financial information users, the FIUs. So all the financial institutions are supposed to adopt this FIP as an FIU, and as the consumers, we can go to any of these FIUs and get our access to all our accounts through this account aggregator. And this is one of the key success story for us to actually go ahead in our intervening into our financing gap in the lending sector. Okay, next slide. So next is basically to understand financial education and consumer protection, because financial inclusion, apart from access, usage, and quality, this is a very important concept of how you educate the financially all the beneficiaries which are at the bottom of the pyramid, as well as doing the consumer protection. So again, it is a common knowledge how cyber fraud and cyber crime right now is a big issue, and how we are trying to handle them with CCFRMS applications of the portal, which is again hosted by Ministry of Home Affairs, with all the banks onboarded, with all the legal entities or the police is onboarded into that platform. And then if you have any kind of a fraud run in the payment system or in any kind of digital, in the UPI or any other fraud which is happening in this cyber sector, then you need to call up 1930 and report it. And then you, within the golden hour, there are provisions in which you can kind of block the defrauded money from the accounts. Okay, so go to the next slide, please. So next we can go to the MSME sector, because, yeah, next slide. MSME sector, the main point which we wanted to raise is because this is a very important aspect, that is one of the areas in which we have a lot of road to travel. Because MSMEs almost contribute 30% to the GDP, but in the MSME sector right now the financing gap is around $380 to $390 billion. And almost like around 60% there is a gap in MSME financing. So our main intention is to how to enable this sector to intervene and then kind of mitigate this financing gap, which this sector is actually having. So I think most of you should be aware that there is a UAP platform, Udyam platform for the micro and small enterprises, and UAP platform. There is Udyam platform and the UAP platform, Udyam Assist platform. Udyam Assist platform is for the informal MSMEs. The intention was like the formal MSMEs at least has some education as awareness to get the lending from the formal sector, but the informal sector, so the informal sector, from a very rough estimate, it is more than 10 crores in India. But the formal MSMEs which has been enlisted in the Udyam portal was around 2.5 crore. So there is a huge gap, which is not even addressed or not even kind of included into our formal financial ecosystem. So that's why the UAP was launched. The UAP is for registering the informal MSMEs. So right now, I think with the UAP and Udyam, we are having more than 5 to 6 crore already registered. So the intention was based on this, if you have a UAP platform identity, then they can actually access the formal financial services. This also acts as one of the KYC documents, the Udyam registration certificate, along with your GST certificate. So they can do the KYC and they could avail all the formal sector services through this portal itself. So that is how the UAP works. Yeah, next slide. So this is like some of the other schemes to actually mitigate some of these challenges on the MSME financing. CGTMSC is like for the credit guarantee schemes. They provide credit guarantee for various use cases for micro and small enterprises. And you will have all the schemes listed in the website in terms of what different kind of schemes, different kind of credit guarantees they provide. Next is Pradhan Mantri Mudra Yojana and Stand Up India schemes. These are also all schemes for this MSMEs. Next slide. Yes, this is another one on the GST Sahay, because the factoring market, although the Factoring Act was passed, SARFAESI Act was passed quite a long ago, but still the factoring market is not saturated to the stage which we want to. It is only about 5 to 10% of this market is captured, and there is 90% of the market is still uncaptured, the factoring market. So this is the MSME GST Sahay based on the Open platform, in which you are doing we are doing factoring without the buyer acceptance. We have a trades platform, which is the orthodox invoice financing platform, the factoring platform, in which the supplier is provided this working capital loan through the buyer acceptance of that invoice. This is the platform in which the supplier is provided the loan without the buyer acceptance. But because it is an open platform, you have all the cash flows and we have integration with all the different kind of databases. So the underwriting and the risk mitigation is quite easy through this platform, and the banks are not getting that much of risks based on the providing this loan on this invoicing. Yeah, next slide. So I'll next, just on the last part, I'll move on to the G20 and GPFI and what are the deliberations which are happening. So G20 was formed in the last 2010 something and around that period. In the is the GPFI, Global Partnership for Financial Inclusion, one of the working group. So G20 have two different kind of one track. One is the finance track, one is the Sherpa track. The Sherpa track have many working groups. The finance tracks also have many working groups. One of the working groups is GPFI, or the financial inclusion. There are other working groups like the Financial Stability Board, the FSBs, the International Financial Architecture. There are many others. You will have to just revise the names of the 6 or 7 working groups which are there in the finance track. So I take care of the financial inclusion, means kind of lead the financial inclusion GPFI work stream from my department. So the deliberations in the GPFI has been going on for the last 15 years. And then the 2000, we can go to the next slide. The next slide, which establishes like what are the different kind of priorities which has been taken up under the China's presidency. The high-level principles of financial inclusion were laid down. In India's G20, we laid down the concept of digital public infrastructure for advancing financial inclusion. Then the remittances is one of the key points, because remittances and one of the key goals of G20 GPFI. The target is by 2030, we have to reduce the cost of remittances by to 3%, the average cost of remittances to 3%. The currently still in 2025, the average cost of remittance based on the data which was published by World Bank was around 6%. So it's still a long way to go. And in that, the digital remittances, the cost of remittances is around 4%. So there is a stark differences between the average cost of digital remittances and the average cost of traditional remittances. So this is also a key priority area in which we are trying to reduce the cost of remittances. And India is doing a great work in terms of internationalization of the UPI, in which we will digitalize the remittances and also reduce the cost based on the G20 agenda. Okay, next slide. So this is, again, I think I don't need to preach the choir in terms of what is a digital public infrastructure, but when in 2023 we coined this term of digital public infrastructure, we meant that digital public infrastructure, the lot of debate on, because whenever you have the word public, it seems that the public means it has to be governed or means launched by government. So the word public doesn't denote government. It is only denotes the intention of the government. The public can be categorized as like that, can be accessible to all who wants to access this platform or the infrastructure. So that's why I think we try to conceptualize DPI with these 3 layers. One is the technology layer, which have the inherent technology architecture and the different kind of security protocols and other things. The governance layers of the legal and institutional framework, and the market layer. Why the market layer is important? Because DPI is not a government initiative. It is only an enabler for the private market players to actually operate on these DPIs. So just to give you an example, if you take UPI as a DPI, and then the technology layer will be the one which is providing the UPI rails and the UPI APIs, and the governance layer is the NPCI, which creates all the rules around the UPI, and the market layers will all be the Phone Pays and the Google Pays, which are again the private market players which are actually operating on UPI. So we have this. So this is overall the grand architecture. I call it the sovereign architecture of India in the financial sector. And this is at present, this is the way we are conceiving. And I'm pretty sure in the next 2-3 years, this will again change. So there are multiple applications on the identity rails, multiple applications on the payment rails, multiple infrastructure on the data sharing rails. And the last one, which we are trying to, the risk underwriting rail, is something which is still work in progress. So which we have to also, every one of you can actually contribute in building this kind of a rail on the 4th layer of the risk underwriting, based on the different kind of APIs and the access to digital data of the GST or the CICs or the credit score or the credit ratings, right? And then the income tax data. Then you can also have the bank statements to the account aggregator or the asset side data. You can actually do alternate database lending scoring for any of the any of the borrowers. So this kind of, so if you can create some kind of a digital public infrastructure which will do this kind of a rating, this kind of underwriting for all this based on alternate data, that can also be a great enabler for this ecosystem to move forward in the banking sector. Okay, so we can move to the next one. I think my time is up, but I'll just take 1, 2, or 3 minutes to wind it up and then take questions, if any. Yeah, move to the next one. Yeah, I think we can skip this. Go to the next one, please. Yeah, so just to highlight, this is like, if you go to this websites. This is the document which we produced with World Bank on on how to leverage DPI for financial inclusion and productivity gains. There was a task force in which I was also leading the secretariat, which was headed by Nandan Nilkani and Amitav Khan. And that is the third point, in which we also actually published last year a report of the task force of India's DPI agenda. And then there is also the Financial Inclusion Action Plan for 2024 to 2026, which is being kind of taken forward by the G20. So these are all the priorities. I think the next slide. So yeah, this is, I will end with this slide because this is the last one in which to give the aspirations of our country. So saying all this infrastructure, the aspiration is that how we can globalize this and we can provide this to the whole world because there are many countries which are struggling to implement this kind of digital public infrastructures. So our knowledge, our capacity, our kind of financial help will also help this kind of a needy countries, mostly in the global south, to adopt this kind of infrastructure and take their economy forward. So we are already doing that with UPI. It is already live in 7 countries. So UPI live in 7 countries is only basically for the acceptance. For the remittance, we are only live with Singapore. For the others, we are live for the acceptance of the payments in their countries. And then we are also in touch with many 80 plus countries in terms of how we can collaborate on the UPI to integrate the fast payment system. Similarly, for the other kind of identity system, MOSIP, or the modular open source identity platform, which is based out of triple IIT Bangalore, they are trying to take to many countries. They are almost live in 11 countries, and they are negotiating with 17 countries in terms of implementing an identity system for that country, so sovereign identity system. Similarly, account aggregator is also taking this kind of an approach to kind of internationalize it. So with that, thank you so much for your patient hearing. I think, and if you have any questions, I will be feel free to address. I will be more than glad to address. Thank you.